Hello, and welcome to the week ahead with me, Chris Pollock. Some big events through this week, and we'll look forward to the week ahead. But let's, as always, start by looking back on the week that was and try to see what we can take from this going forward. Um, the elections are still very much in focus, aren't they? We're still hearing now that Trump is um, putting former TV anchors into positions of high power. The defense secretary used to be on Fox News rather than the four-starred general that he's taking over from. And the other thing that's happening with Trump that's very much in focus is going to be his future spat. It seems inevitable with Jerome Powell. Um, the arguments have started, and the defenses have been put up, you would say. And Powell yesterday probably made a move that was not well received by Trump, by suggesting that the rate they don't need to be in a rush to cut interest rates. I'm sure Donald Trump would disagree. This has led to kind of the big washout that we've had into the end of the week. Let me to the micro chart so you can actually see a little bit clearer as to what's going on. And yeah, we had this. This was at 8 p.m. last night. We saw a big decline from there, and we're still in that decline at the moment, right? We're seeing down the best part of 8 o'clock yesterday evening. Currently recording this just before, just after the European markets closed Friday night. So a soft day, at least so far in the US. There is some you probably do worse than a little buy here to see if it comes back, but yeah, that wouldn't be suggesting we're not going to get this in time, so let's not worry too much about that. I think that yeah, the day has run its course. There's been some nice shorts available throughout the day today. I think the easy money has certainly been made so far. Yeah, best part of 100 points off since Powell's not in a hurry to cut interest rates chat. And what's this meant for US yields? So the US 10-year yields, these long-dated yields, are just continuing to push higher. We nudged up to 4.5% today. We hadn't been there since back in May of this year. To be fair, it was the end of May this year. So 6 months ago, we touched these levels, and we haven't seen them since. These round numbers, well, 4.5%. This is probably quite an important figure if you take in mind that the high of this whole cycle was up at bang on that 5% level. We didn't have a single day where the yield closed above 5%, yet we touched it on more than one occasion. So these round numbers, 4.5, 5%, are going to be important. Maybe this is a little bit of a turning point. Be interesting to see what happens with this from here. But a lot of the central bank members suggesting that there will be rate cuts, but maybe not as, or at least insinuating not as many as the markets would have suggested. So the feud will likely continue with pressure put on Powell from the government to cut rates, and Powell probably irritatedly rejecting those requests. Wrap yourselves in. This is going to go rumble on and on for the next 2 years of his tenure. He survives that long. Let's look at the week ahead. Not going to absolute monster week. We're on the back end of option expiry as well today. Not a huge option expiry in November, but this seasonally is actually a bit of a weak time in the market. You have a look at the seasonality. The week coming up takes us into a period where we tend to see weakness in stocks, and we actually see a lot of weakness in the S&P through the last quarter of the year. Really, from middle of October, it tends to be almost the best time of year. Stocks, barring maybe March through to May. But this little wobble that we tend to see around, it tends to bottom out around the 20th of November. So let's see if that's going to be the case this year. But from then on, you can probably plug yourself in for some longs and see where that takes you. So let's talk about the news that's coming up for being in the middle of the week, maybe put something in there to get things turning. But as always, we roll into Monday without too much on the cards. The G20 meetings are unfolding. I'm sure a lot of the leaders will be discussing with one another how on earth they cope with a Trump presidency once again. A few of them are already on the back foot with these tariffs, looking like they're casting a big shadow over countries like Germany, who do have a lot of manufacturing exports to the US. BMWs and Mercedes and Porsches bought out there. If there are tariffs put on their vehicles, then perhaps it will not get that revenue and that manufacturing demand. So the G20 meetings will be going on through next week. But apart from that, on Monday, not a huge amount to report. Tuesday brings us CPI, some more inflation numbers out, this time out of Canada. This actually can be quite a nice market mover, especially against the Japanese yen. You can get some big volatility sometimes. Might be something worth having a look at on Tuesday. Wednesday, UK get their CPIs. Again, this used to be a really nice number for us. We've mentioned this before, but the inflation numbers, the CPI numbers, are nowhere near as important as they were 2 years ago, given that the inflation numbers are really falling back in to calm levels. We were posting, 1.7 previously, below the 2% target levels, maybe why there's been calls for bigger rate cuts in the UK. But yeah, we're expecting it to nudge back above 2% to 2.2%. Be interesting to see where that goes. Got this financial stability review. Oil inventories back to Wednesday after shifting to Thursday this week because of the bank holiday. And we're getting the equivalent of the minutes, the monetary policy hearing chat out again on Wednesday. Thursday, normally the biggest day of the week. Late chat from the Governor of the Reserve Bank of Australia. Unemployment claims kind of in there on its own. The Philly Fed Manufacturing Index rarely registers these days. And yeah, not much else. Same sort of story with the existing home sales. So as Thursdays go, not the biggest in terms of a news release Thursday next week, but all eyes on Friday. PMI Friday. PMIs are the precursor to GDP, right? They tell us what GDP will be before GDP knows what it's going to be. And that all rolls through on Friday morning. So Friday morning from starting in France at 8:15, Germany 8:30, Europe rounding up the Euro impact ones at 9 o'clock. The UK have their go at 9:30, and the US shortly after the open at 2:45. And that kind of rounds up the week from a data perspective. I'm sure there'll be chat and we'll hear more from the Trump administration about their appointments and which weird and wonderful people are going to be taking positions. Maybe that fresh approach and is what's needed. You're optimist. The bond markets, again, because of the Trump administration coming in, the bond markets are going to be interesting to watch. And it's only 3-month and 6-month bills out Monday. But later on in the week, we have a 20-year auction at 6 o'clock and a 10-year tip. So this is the inflation adjusted auction. I think this will be really interesting on Thursday. This might be the most interesting tips auction we've had for a few months. So that they're all, those two big ones are out both at 6 o'clock, both on Wednesday and Thursday of this next week. Not too much in terms of earnings. We're kind of towards the end of the earnings season. So we'll put that away until on the video, which I think is out the following week. And yeah, we'll put that away until January when it will all begin again. So apart from that, we'll leave it there. Have a lovely week. Do reach out if you want to have some one-to-ones. There are some really interesting trades we're taking at the moment around the option expiry and what you can do with the option data that you may have seen earlier. They're really pinning the market at the moment. If you trade the S&P, you really need to know what's going on with those zero DTE options. So if you want to find out about that or anything else, please reach out to me. Delighted to explain a bit more. A good week.